This is the Scrap Metal and Commodities Recycling Report by BENLEE, Roll-Off Lugger, and Open-Top Trailers, and Raleigh Goldsboro Metal Recycling, Monday, July 25th, 2016. In this report, many commodity prices came down a bit, while the U.S. stock market hit new all-time highs for the second week in a row. U.S. steel production came up a bit last week, and while still off its recent highs, production is about 22% higher than it was in January. Oil prices came down to about $44 a barrel, yet still remain 68% higher than they were in February. Oil rigs, major steel consumers, rose last week for the 7th time in the last 8 weeks. While not a huge increase, this is clearly positive news for companies that make steel for these rigs and for the companies that supply scrap metal and iron ore for those steel mills. Iron ore finished up Thursday, but was actually down for the week. Like other commodities, while iron ore is a relatively low $56 a metric ton, it is about 50% higher than it was about 7 months ago, which is truly a major recovery. We remain hearing about large amounts of HBI, the scrap steel substitute coming in from Russia, and other imported scrap metal coming in from Europe. These imports help depress U.S. steel prices. This chart shows the strength of the U.S. dollar, our currency, versus other global currencies. The U.S. economy is not great, but it is better than other global economies, so our currency is stronger than theirs. When that happens, it makes imports cheaper to buy. So pretty simple. U.S. dollar better, U.S. scrap prices worse, due to U.S. scrap yards have to compete with those imports. Scrap steel prices have remained steady. There is word that next week higher end products like busheling could decline. The question is, with high imports of ferrous scrap and HBI, combined with lower flows coming into scrap yards, what will happen to obsolete scrap steel prices? Hot rolled coil prices remain stable, with the U.S. economy remaining pretty good. With scrap prices weak and demand good, not great, prices could remain stable. 3 or 4 stainless scrap prices held higher than they were and remain well off their lows of earlier in the year. Copper held steady for much of the week, but declined a few cents on Friday. And when looking at the 1-year copper chart, like other products, we're off from the January low and copper remains trading in a range. Aluminum, after trading up for about 4 months, declined last week on no real news, but as said earlier, the strong U.S. dollar hurts commodity prices. And for the first time in months, though, we see a small uptick in inventories. Look to the right of the chart. And as has been said, lower inventories could bring higher prices, followed by higher production, which then brings lower prices. Congratulations to Nucor Steel. They announced their profits almost doubled from the same period last year, driven by prices being 9% lower, but scrap and scrap metal substitutes being down a big 14%. Operating rates were also nicely higher at 83% versus 73% a year ago. Nucor also said their scrap business improved due to higher prices, more teaming with their steel mills, and cost improvements. Importantly, DRI operations, their scrap substitute operations, also improved profits due to higher prices and lower iron ore prices. U.S. initial jobless claims fell yet again and are near multi-decade lows. While we are not creating enough high-wage jobs in the U.S., more U.S. people are working. With problems in China and Europe, as well as Europe now having negative interest rates, the U.S. stock market continues to hit new highs and has been up for 4 weeks in a row, a great performance. There is a term called the wealth effect. When people feel wealthy, they spend more. With the stock market at new highs and 401ks doing well, the U.S. economy could benefit, which could help stabilize to increase commodity prices. Housing starts came up a bit to just under 1.2 million units annualized. When we talk about good middle-class jobs still being a problem, look to the left of this chart. Home construction was almost double in 2006. 30-year home mortgage rates rose a bit, but remain near historic lows. Refinancing homes at lower rates puts money in people's pockets and helps the economy. So for all those watching, consider refinancing if you have a mortgage of just about 4%. With that, we hope all have a safe and profitable week. My name is Greg Brown.